Hey everybody, this is Jose Blasco. We are about to get started. This is a sound check before we go. As always, looking forward to get a quick hello message from you on the chat box so I know you hear me. And we are ready to get started. All should be good. I believe it is, but always a good confirmation to have. So thank you very much for typing just a quick hello message on the chat box, guys. And when I turn on the video stream as well, so I can say hello here from the bottom right corner of the screen. And we are 15 seconds to go before we get started. How are you, Joe? Good to see you. Thanks for that. 5 seconds to go, kind of. 5 now. Almost ready to get started. Here we go. Top of the hour. My friends, welcome to the session. This is Jose Blasco, November 14, 2021. This is our top session for top traders. How are you, Siderman? Good to see you. And we're gonna get started just right now. Okay, before we get started, disclaimer on the screen, upper left is being highlighted for you. Please read it carefully. This is important information as always. Do not skip it. Read it carefully and completely. I'm counting on you to do that, as it is indeed important information, as I said at the beginning. So please do that. The structure for today's session is we're going to be talking about the platform top. We're going to be talking about trading. So we're going to have some lectures built in. Sometimes we are talking about just, about settings in the platform. So then we don't need to talk about trading. But sometimes in order to talk about certain functionalities, you cannot separate, and we need to talk about trading. So often the top sessions are a mix between using the platform as well as a little bit of trading lecture time, which hopefully is quite enriching for you guys. Then, of course, anytime questions and answers and anything you guys need, just let me know. How are you, Christian? Good to see you as well. Wonderful. So let's get started, okay? And yes, a few things before we get started. First of all, we have a new page. We were having a technical issue, and thank you guys for helping us to figure out that there was a problem, and then now there is a solution. But basically, when you have questions, apart from sending us an email, which you are obviously welcome, we would love you guys to utilize the pages that direct the questions directly to your instructors, such as tradewithufos.com/Jose, or it could also be /Becky/Boyan/Pedro, Reynaldo, etc. And that way you get to a page that looks like that, which, as you may realize, we have changed the bottom part of this page because we were having some technical issue, but now it's working perfectly. Just make sure you log in if you are not, in order to be able to click on ask question and pose your questions. And the moment you pose your question, it will show below the way it's showing here. And you can then click and get your answers. Or maybe even smarter, I would say, would be that before you post a question, you check if the answer is already there. So let's say you have a question related to EMA. So you just type EMA, you hit enter, and then the system will show you if there was any question related or talked about EMA somewhere. You will have those questions there, so you can click and read, and probably this will help you to save time and learn in the process. So anyway, use that page. That would be great, and that way it's good for you, it's good for the community. Second thing I wanted to say is that, well, today it's kind of obvious. We're talking about top, so we have apps on our website, a collection of supported platforms. The one we are discussing today is top, which is here. And most of you, I would think that you are familiar with this section on our website, but just in case you're not, this is how you find the button for you to subscribe, and also you can select if you want it to be monthly or yearly. And before we get started, the last thing I would like to mention as well is that today we're going to run the session for 45 minutes instead of an hour, maybe 50 minutes. So we'll finish just a bit earlier than normal. Yeah, that's going to be today, okay? But in any case, we should be able to have time to complete a conversation we started last week. If you recall, last week, we started learning more about the studies available in the platform. We started working on the upper part of the list, which we said the upper part of the list are going to be studies that show us an overlay. For example, the UFOs, the overlay on top of those candles, where the bottom part, we'll keep that for the following week. Those are indicators or studies that show us a subgraph, for example, AutoClimate. Okay, So last week we went as far as the Donchian channel and we stopped there. So we're gonna continue with the remaining indicators today, which I believe we should have time to go over it now that the mechanic on how those adding, editing, or removing studies work. So I believe that should be able to fly through this while I will add relevant information that of things you need to know or you need to keep into consideration when you are applying or adjusting such studies. So to do that, I'm just going to use a floated chart, and I'm just going to maximize it whole screen, so that way it's maybe a bit more efficient with the use of the real estate space on the screen. And I'm going to go ahead and first of all remove everything so we have a blank chart, and then we're going to go back to add study. And I'm going to continue. We stopped with Donchian channels in the last session, so we're going to continue today with the Elliott wave turning points. So again, when it comes to Elliott wave turning points, we could have a multi-day, many hours discussion talking about what is Elliott wave, how it works, is it good, is not good, what works best. Again, there are so many things that we can talk about it. Today, I'm going to be very pragmatic, and I'm just going to give you a crash course on Elliott wave and how to use it in the platform. But for sure, in the future, we can go deeper into it if you guys, would like to know more about this. So I'm happy to organize maybe some webinar or something like that specific to talk about it. If you guys are curious, just let me know. So how do you add Elliott wave turning points on the chart? Well, you just click on the study, and then what happens is that by default, you will have this settings window show up, this pop-up window show up, where you have many things that you could select or change here. So first thing I would like to make you aware of is the fact that we have 5 different choices: the short term, medium term, dynamic, long term, and ultra short. And some of you may have a trading plan where you only care about the medium term. Some of you may have a trading plan that want to trade absolutely all potential Elliott wave turning points. You want to trade them all. So depending on that, first, you will need to decide which ones you keep as checked or unchecked. By default, they all come as checked. But remember, let's say you don't trade the ultra short and you don't trade the dynamic, so you can uncheck them. And the moment you have them unchecked, then you can save that as a default. So then every time you would insert Elliott wave turning points, then those 2 types of signals would not show up. Okay, so this may be convenient to you because again, I would expect that you don't trade every single signal, even though nothing wrong with that. There are some consequences I would like to mention, but nothing wrong with that. Okay. Now, so let me go ahead and click OK. I'm adding everything now, just so we have the opportunity to see a little wave on the screen before. So you can see you have all those little, diamonds, triangles, dots with different colors. All of those are the indications of a potential turn that could have taken place. Now, first of all, if you look at it with this view, you're going to be like, oh my God, this is amazing. Almost every one of those indications was a profitable trade. And again, it's not exactly the case, because every time an Elliott wave turning point forms, and let me look at the current candle where we actually have in the S&P a potential Elliott wave turning point just happening here on this candle, on the last candle. So very convenient for today's presentation that we have this example right here. So when you look at this, okay, the first thing that you notice is that you are being given the signal, which means that the price action that this candle produced confirms this is potentially a turning point, and therefore a new wave that begins because it's that particular color. So we are talking about a short-term one, and the tool also indicates what a target 1 for a wave would be and what a final target or target 2 for a wave would be. Also talking about the movement or traveling space for those waves. You also have these dotted lines on the opposite part of the target boxes. Again, you also have turning points to the downside, right? So in this case, the target boxes would be below and the dotted line would be above. I guess that's quite obvious. So, if price, instead of traveling and reach that upper box, price was to travel and hit the dotted line, so then you are being now proven that that wave didn't work. The wave failed. It was a fake indication, if you wish, in the sense that the Elliott wave theory didn't become a reality, and then that dot would go away, meaning that all those dots you see are dots where you may not have reached target 2, you may have only reached target 1, but you never reached the dotted line. And on the other hand, that means that there are more signals that would be produced during all this time that were not kept on the screen because it would be too busy. And those signals that are not shown on the screen, those would be failed trades. Okay, so if you were to use, and yes, very good question, Fernando, with the use of the dotted lines as a stop loss. I'm gonna actually enhance that in a moment. So let me answer that in a second. But basically, yeah. So what you have on the screen is basically what worked, in the sense that we didn't reach the dotted line, but you may not have necessarily reached the final target, the target 2. The wave may have been like a shy wave. Notice how sometimes, let me zoom out to see more examples. So notice how sometimes, like for example, here's a good example where you have an indication, price didn't go too far, and then you have another indication, price didn't go too far, and then you have another indication. So, sometimes it's kind of like the Elliott wave count resets because a new Elliott wave indication shows up, and therefore you may not have reached the target 2 on the initial indication, but it still shows on the chart because it didn't reach the dotted line. Okay, so again, the dotted line is what would make those indications to go away, and therefore there are more trades to be taken with this technique that we don't see at the moment. And you need to keep that into consideration. Okay, so when you are looking at this indicator to plan your trades, and maybe you come up with a trading plan and you're like, oh my god, this worked amazing on, let's say, McDonald's, that's it, that's what I want to trade. Well, my suggestion to you is don't trade it immediately. What you should do is go back in time, okay, and then just play the markets, and back test it, okay, and back test it. So in this case, we didn't reach target 2. In the second indication, we reached target 2. Backtest it. Okay, here is an indication. Now, target 2 was reached. That's why the diamond is kept. In this case, notice that we didn't reach target 2 for the yellow, but then a new indication showed up. So that one is in the screen. So again, you would want to go over this process to get to understand the nature of the markets that you trade, because, as I said, not all trades will be profitable like all trading systems. Okay, so keep that in mind, because on the screen it looks extremely amazingly powerful, and it is. But of course, there are a few stop outs along the way that you need to be aware of, and that's going to be different for all markets. Okay, so keep that in mind. Now, what else? Let me go back to the settings. So if we go back to the settings, edit, study. So here there are many indications. Okay, if that's okay, I'm not going to cover everything because it's way too many things. But as a rule of thumb, so first the confirmation, meaning when does the signal shows up, could be conservative, could be aggressive, could be on the signal bar, could be based on the regression line. So you can make these to be more slow or more active, and therefore act too soon or act later, which both have pros and cons. If you act too soon, you have less risk, but you may be stopped out more often. If you act too late, you have less risk, but you may miss a bunch of trades. So again, everything in life and trading got pros and cons. So do your homework, practice those different possibilities, and that's it. Then, of course, you have the ATR lens and the multipliers. So I would say, if you don't mind me to say, that the way the tool has been coded is quite intelligent. So tweaking too many of those values may end up driving you crazy to realize that what you had at the beginning was pretty powerful. So again, for sure, play and experience with it so you know what you got in your hands. But like, for example, if you change the ATR length to another value, you will get more signals, especially if it's a lower value. But the power of those signals probably is not as efficient. Why? Because one of the beauties of Elliott wave is that we are not the only person in the world looking at it. And therefore, when a new wave begins, all the Elliott wave traders in the world jump on the wave and try to ride it. So in other words, that signifies that you may have more buyers to buy after you bought or more sellers to sell after you sold. So now what happens if your settings are so unique that only you uses them? Yeah, that may be very smart from a entry detection point of view, but from a continuation of the move point of view, since you are the only one who knows that waves begin, you may not attract too many buyers after you bought or sellers after you sold. So again, I would say for sure, just do your homework, learn the tool, practice, change settings, find out the differences. But at the same time, this is not a holy grail by changing those values. Okay, just like any other study, this is not this value you make it like whatever, and next thing you know it becomes a holy grail. It's not the case. So I would suggest to spend enough but limited amount of time trying to customize the settings, because in the end there are so many possibilities that you're gonna drive yourself crazy, and basically in the end whatever you get probably is going to be very similar with other settings too. So yeah, so that's my little piece of experience that I'm sharing with you here. Now, what else is impactful here? Okay, and I would say this is going back to you, Fernando, now when you were asking about the stop loss. Okay, so indeed, one way to trade these particular signals. Okay, and again going back to the last candle on the chart. So now that you got the confirmation, okay, so one classical and definitely valid way on how to trade it will be, okay, so since the signal tells me to be a buyer, okay, so option number one, I'm going to look at the high of that candle, and if the next candle starts trading above that high, I'm just going to go long, and I'm going to go long with a stop located here and with a target located in that area. Now, if you do that, while it makes a lot of sense and it would be a valid way on how to do it, the problem is that your trades, almost every one of the trades are going to be 1-to-1 or worse. Okay, so while this is a classical way on how to do it, I want to show you an alternative way on how to do it, which could be better. But in any case, the dotted line indeed could be used as a stop loss. Okay, now one more about that. I'm going to go back to Eddie's study, look at the Elliott wave. So if I check mark trailing stop, which by the way, this comes by default, okay, but I disable it, okay, and to me, I just unchecked and then made it my default, okay, but as a default, it comes like that. So what this is gonna do, okay, so for example, if I come here to where that dotted line took place, okay, so okay, so here's the indication. So again, if you were to take this trade the way we said, you will look at the high of this candle, and whenever the next candle trades above, so the bottom dotted line, that would be your stop, and the final box would be your target. That could be one way on how to do it. So if that was to be the case, you do nothing, you do nothing, you do nothing, now you take the trade, okay, and now your stop is below, but now you have an Elliott wave turning point in the opposite direction. So what I was going to do about with the dots for the trailing stop is not going to work. So let me find a neater setup so I can explain that better. So same story, you have a blue indication for an Elliott wave, that medium term Elliott wave turning point. So let's say you got into this trade. Now notice that as the market starts moving, okay, notice that now you got those little dots that show up below price, following price, following price, following price, following price up, and the moment price crosses over, then you won't have more dots anymore. Okay, so what are those dots? Well, those dots are a potential location for a trailing stop. So beyond having your original stop, the moment that trade starts working in your favor, you can start trailing stop. That technique, it's very similar to a parabolic SAR, which is a classical technical analysis technique used by millions of traders in the world, where I will explain it later when we talk about parabolic SAR, or maybe in a future session, depending on how much time we take today. But basically, if I just plot it on the screen, notice what this is doing. It's giving you those dots, right? And the moment one of the candles, in this case that one, crosses the dot, then you start having dots on the opposite direction, right? So here, notice how you have dots below, dots below, dots below. Why? Because the market is going up. The moment a candle crosses that last dot, now you start having candle dots on the upper part, and those dots go down, 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 until they are being crossed. And when they're being crossed, a new dot starts in the opposite direction following price. So this is a parabolic SAR technique, and the Elliott wave tool, if I was to remove parabolic SAR, so the Elliott wave tool got that particular indication as well, but only when that market starts traveling in your direction, reaching target one and beyond, and now those dots start to appear. Okay, so it's pretty convenient because it's not like floating your chart with dots everywhere. They're only showing up when you need them, meaning that you are in a particular wave and the wave is moving in your direction. So again, you can check them or uncheck them, and you can make the location of the stop to be looser or tighter, depending on your preferences. Okay, my preference, okay, and this is just mine. It may make sense to you. You may like what I'm about to show, but it's just my preference. So again, do your homework and practice the various alternatives that you can see are many here. But my favorite way on how to do it is not to trade Elliott wave by itself, but do it combined with our beautiful UFOs. Okay, so how can you do that? Well, one way to do that would be to rely on lower timeframes. Okay, so for example, here, let's go back to this point. This was October 1st. Okay, so in October 1st, you got that Elliott wave turning point. So what can you do? Well, you can drop to a lower time frame. My preference is to use fib numbers. So I'm going to use 55 minutes in this case. Okay, I'm going to go back to October 1st. Right here. Okay, so this is October 1st. Okay, here we go. So this is October 1st. Okay, and so what I will do now is right click to insert the UFOs. Okay, and then of course I'm going to have to rewind to October 1st, end of the day. Okay, end of the day is right here. Okay, and notice how I got not only on the daily time frame I had an Elliott wave turning point, but on the 55-minute time frame I got the evidence that shows me that they are green UFOs representing buy on field orders. Okay, buy on field orders. So what would I do now? Well, I would just wait for price to come here. So now my entry is going to be here, my stop is going to be here, meaning that now the risk I'm going to take on this trade is going to be much tighter. Okay, and well, in this case, actually, I will be stopped out. Okay, because it went below the low, it went below the UFO. Those on field orders were canceled, so I will be stopped. And to be honest, if you recall on the, let me fast forward on the 55-minute time frame. Let me go back to the beginning. On the 55-minute time frame of the S&P, well, right now we're exactly at 50%, but I remember very clearly that a few weeks ago it was not the case, which is almost always the case with the S&P, because we got the S&P futures, which is where we see the real UFOs, because that market trades 23 hours a day. So not a surprise that those UFOs were traded through on October 1st, even though even using other stocks, or even using the futures to do this, of course you will have losses from time to time. But I'm just saying that you should also look at the probabilities that those UFOs are providing you to know which time frame to use, because based on the probabilities you may decide not to use 55 but use 21 or use 89 or use another time frame. Okay, but my point is, on a larger time frame you got your Elliott wave indication, then you drop to a lower time frame, find the UFOs, find the right probability, wait for price to come back, and now you're going to have a trade where your risk is less. Now let's say you get stopped out, okay, but you still have the Elliott wave condition in place and a new UFO forms. Well, it's not a crazy thing for you to plan on re-entering if that was to happen. Price didn't come back to that UFO. So, okay, now you will be in, okay? And, now you're in business, okay? Now you're in business, and, and from there it went way, way, way higher. So, so then this is one more intelligent way on how to catch a wave while you manage your risk more efficiently, okay? Just like what we cover in our courses, what I've said many times in the sessions, you got direct forces, you got indirect forces. Well, the more forces you got align helping your trades to do well, the more efficient you're going to be as a trader. So only using Elliott waves, only using Bollinger Bands, could you have profitable trades? For sure. What if you were to combine it with the UFOs, where now you have indirect and direct forces? Well, you are indeed adding odds in your favor, and also finding a convenient way on how to manage the risk, because now instead of looking at a mathematically calculated dotted line, which is very smart, okay, but notice what's happening here. Okay, that mathematically calculated dotted line is within a UFO. So what could very well happen is that price goes down, hits the dotted line. If that was to be your stop, it takes you out, and then the UFO kicks in, and now it goes, but you are out of the trade because your stop was located based on a mathematical calculation instead of based on the on-field order. So again, I would say again, it's a very strong preference for me, and to me, I don't even think about it on how clear it is in my mind, even though we are all different traders and there is no right or wrong, and for sure there are many valid ways on how to trade. But again, since I happen to be your coach here, I am sharing what works for me and my preferences, and definitely combining the UFOs with Elliott waves in this case would add more of an edge, more probability to the beauty of Elliott wave already, and the beauty that Elliott wave in top is totally objective and automated, and you can also scan for it using the matrix. Okay. Fernando, are the long-term signals better? Yes and no. So if I go back to, very good question. So if I go back to the Elliott wave turning point tool, so you have short-term, ultra-short, medium, long, and dynamic. Okay. So what all of these means and which ones are best? So again, the proper answer is do your homework, backtest it with whatever market you trade, and you will know. That's the proper answer, and that's the one. But having said that, of course, happy to share some of my experience. And most of the times where I've been doing backtest and analysis of this tool, the signals that tend to work the best are the one which is short-term, yellow color, the one which is medium-term, blue color, and the one that is long-term, orange color. Those are the ones that tend to work the best. Now, having said that, the orange color is a bit tricky because, on one hand, if you catch a move, it's going to give you a much better reward to risk ratio because the wave is supposed to be larger because it's long term. But at the same time, precisely because your targets are further away, what I did notice too is that you tend to reach those final targets less often. Again, each market is different, and market conditions also change. If you look at the markets in, 2010, for example, if I'm not mistaken, was a bit boring as a year. If I'm not mistaken, I'm not sure now, but I believe it was a very flat year where the S&P started and ended at the same place, 0% performance in the whole year. Where you look at 2020 and market went down crazy, but then rallied like crazy, and 2021 also beautiful. So those years you may reach those long-term orange signals. So again, for sure, the overall market conditions have an impact on what I said, but as a rule of thumb, the further away your targets, the less likely you will meet such targets. So again, my conclusion here is that yellow and blue are probably the most efficient from a tradable point of view, while everything else makes sense, but they may be more depending on the overall market conditions to be more trendy, stronger, volatile, less volatile, etc., etc. Okay, very good questions, Fernando. Can I have more than one target? Yes, indeed, and that depends on your trading plan. Just like when we trade, if you join Boyan, for example, in the future sessions, it's going to have safety target, final target, and it's not even using Elliott wave, but it's having two targets, right, for risk management purposes. So you can indeed do that. Yeah, and the dynamic signal, you may want to think about it like it's super ultra short, right? And yeah, so that's what it is. Anyway, so let's remove all studies. And I believe actually that was a lengthier explanation than what I was planning to discuss with Elliott waves, but very good questions. And therefore happy to comment. Okay, Mark, my default settings are it depends on the chart I'm using. If I'm using the S&P, I'm looking at the S&P, I like to see all the signals because all signals on the S&P are likely going to be seen by other people, and therefore they may be relevant overall. But when I'm applying these to specific instruments, I would rely on the yellow and the blue. And if I am applying it to intraday trading, especially if it's very low time frames, such as 5 minutes, things like that, so then I would be looking at the yellow, the blue, and the orange. Because I just said that the further away the target, the more difficult to reach it, but a far target in a 5 minute time frame is not far. So then I would be happy to look at the yellow, the blue, and the orange. Okay, but daily time frames are above, typically I would stay with the yellow and the blue. Just sharing, guys. But again, all of this is very personal, and happy to share, my personal details when it comes to my trading plan. But do your homework, because it will also give you a great advantage when you practice with the tool and you get accustomed to it and you see what happens, and now you build up confidence and less mistakes as well. So do your homework, please. I know you will, and I know you are. I know some of you did already, so I know that. But again, I have to say it because it's critical. Okay, just don't follow what I say or no one says just because they said. Just make sure you take it as a learning experience, as an opportunity to save time in your learning and building up experience. But then go do your homework to double check what I just said applies to you when you see it happening on the charts. Okay, and that way you double check, but also you understand a bit better the trader in you. Okay, you may become an Elliott wave fan. You may realize that Elliott wave is not for you while it's cool and while it's powerful. So again, do your homework. Earnings is the next tool. Siderman. Yes, the ATR and the rest of the settings, I leave them as standard. Yes, because this is just like the AutoClimate. Okay, so what's the philosophy of the AutoClimate? So AutoClimate, we apply it to a common time frame. And why a common time frame? Because we want to attract more people to buy after we bought. We want to apply more people sell after we sold. So, we want it to be as generic as possible. So the signal is not only being seen by us, because we are not relying on Elliott wave for our entries. We are relying on the UFOs for our entries. Okay, and that's a hidden, secret way, if I can say it like that, for us to enter and exit the markets that other people don't know even exist. But Elliott wave, it's basically telling you a wave is beginning now, and that's your opportunity for you to enter and then have many more people to try to participate of the wave after you are in, which is more buying after you got in, helping for the wave to progress, or more selling if the wave is down. So as I said before, I would not recommend, even though do your homework, you may find something I don't know, because I don't know everything. But based on my experience and the philosophy of the use I'm sharing with you, using common timeframes, using common settings is probably going to give you a more efficient use of the tool, okay? Because of the rationale I just shared with you. Yes, great that you took a screenshot. This is, of course, being recorded too. And on top of that, those were the basic settings. The only thing I'm not using from the basic screen is the trailing stops, because I'm not trailing stop using Elliott wave. I'm trailing stop using the UFOs and so on. So I'm not using that feature, so that I disable it and made it as a default to be disabled. Cool. Next one, earnings. Okay, so let's talk about earnings, and that one is crazy simple for us to discuss. So if you click on Add Study Earnings, okay, and you click OK, well, first of all, here nothing happens. And why is that? Well, because it's an ETF, okay, or let's say you are charting the euro, you're charting futures, you're charting the Bitcoin. Nothing's going to happen because those assets don't report earnings. Who report earnings? Stocks. Okay, so let's say we look at McDonald's. Okay, now what's going to happen is that now you got those little E's in the bottom part of the chart. Those are your earning dates, and if you put your mouse on top of it, it's going to tell you, what happened, the results, what is a surprise, not what are the percentage of the surprise. And if you drag the chart to the left, it's going to show you the futures dates that are already in plan for the earnings, which, by the way, they can change, but they are the ones that are official at the moment as we speak. And if you don't mind, I'm going to take a sip of tea, if you don't mind. Thank you, guys. I was about to cough. So very simple and easy to use tool. Now, a few things. If you put your mouse on the one that is coming, if the date is far, it will look like that, and it doesn't show too much. But if you are looking at, for example, Hewlett Packard, HPQ, where the earning is about to happen, when you put your mouse on top of it, it's going to tell you the time of the day. Okay, so not only this is the date, but it's it's supposed to happen after the market closes, and it's also going to tell you what's the estimation, blah blah blah, the date of the next report. But what's very important is that thing, because you have two cases in the case of earnings, which is they are reported after the market closes on that day or before the market opens on that day. Extremely few earnings are reported during market hours. Extremely few, and typically is not very liquid or very well-known stocks. Typically is not the case. Okay, and like typically I mean like I don't know, less than 1%, I would say. This is a guess because I never looked into it from a statistical point of view, but again, all the stocks I trade and I traded for years, none of them ever reported earnings during the market hours, even though some do. Okay, so keep that in mind. So now, what else can you do with earnings? Well, you can edit the study, go back to earnings. Okay, and this could be convenient to you, especially if you want to make it more visual and not to miss the fact that earnings were happening and you didn't realize the little E was in the bottom part. So you can draw a vertical line going all the way from the bottom to the top of the chart. And then, of course, you can change colors and set as default whatever you want. You click OK, and now you have these vertical lines all the way to the top, which are those earning dates, which make it very, very visual. And now, the probability of you missing on the fact that earnings were coming, is very low. Also, one recommendation here is that depending on the setting you have on the format, right-click format, depending on the setting that you have, when it comes to offset, in this case I got 5, which is my default, well, you may not see the next earnings. So let's say, I would recommend maybe to make it like something like 25 or something like that. So now you are giving yourself more space to the right. Okay, I don't do it myself because I always use the UFOs, and I have that with the UFOs. If you recall, when we talked about the UFOs also have an offset which is set to 50. So even if my chart offset is set to 0, I still got space on the right, 50 bars. So that's why I have it set at 5. But basically, you always want to have that space on the right so you can see the future events coming. Because if you don't have too much of an offset, you may not see it, and next thing you know, you get into a trade, and now price is traveling towards your target. Next thing you know, earnings is tomorrow, and you're like, oh my god, now I need to close the trade. Maybe I should have not got in the first place because it's no way I was going to reach my target since earnings were happening very soon. Okay, so just do that just to save yourself headaches or surprises, the ones that tend to be bad surprises. So you get more visibility of those little E's. And also, by the way, earnings show on the daily time frame. So if you move to a 2-day time frame, it will not show. If you move to weekly or intraday, 60 minutes in this case, it will not show. It only shows in the daily time frames. Okay, so make sure that if you trade stocks, earnings is something important to you. Make sure that whatever distribution of charts, whatever setup you have within top, how you position your various windows, just make sure that you always have a chart set up using a daily time frame, so you always have visibility of those earnings, so you don't have those problematic surprises, as I was saying before. Okay. Any questions about earnings? I see, Joe, your question on Elliott wave coming to this. One thing about the Elliott wave indicator, you need enough data for the alerts to appear on the charts. Yes, you're correct. You're correct. And I didn't say it because it's kind of obvious, but at the same time, you're absolutely right, because you may be trying to optimize your setup, limit the amount of candles per chart just to save resources, save data downloading, which is a smart thing to be done once you know exactly what you want to have on the screen. And then next thing you know, Elliott waves don't show, or maybe you only see the short term and you don't see the long term. Okay, so give yourself a great quantity of candles. I would say minimum 300 for Elliott wave. That could be a good rule of thumb to follow. And thanks for that suggestion question, Joe, which shows you've been practicing with it, which I love it, guys, because it's one of the things that make my day every time we meet in the room here to talk about trading and the platform. I know you guys are committed, serious, passionate, and you put time and effort, and it's a privilege for me to be working with you guys. So keep up the good work. Love it. What else? Let me remove all studies. Okay, and let's go for the next one. which the next one is the Ichimoku cloud. Okay, Ichimoku cloud. So this is an indicator, a very, very commonly used indicator by millions of traders around the world. To be honest, if you don't know what you're looking for here, or if you never use the indicator, probably it doesn't give you a very good first impression, because you see so many lines and colors and crossovers, and you're gonna be like, oh my god, what do I do? Okay, well, again, one day if you need, we can always have a webinar to talk about the Ichimoku cloud. But I'm just going to be very pragmatic, just like I've been with Elliott Wave, even though in this case it's going to be a bit shorter as an explanation, and tell you what you need to know about this tool and how you could use it, and how you could use it better than by itself, and that hopefully will give you good applications. Christian, how important are the entries and targets in the bubble when hovering above the Elliott Wave signals? How important are the entries and targets? They are critical, because not hitting target 2 means the wave failed. Hitting the stop loss means the wave failed, right? So first of all, from a purely wave definition, okay, I'm not sure this is the best way to say it in English, but you got me. So from a pure definition of what's a wave, those values are basically the guide. So they are very important from that point of view. Now, from a trading point of view and from a trading plan point of view, you may have more efficient ways on how to set entries and exits using the speed bumps that you probably recall we talked about in other sessions. Okay, so here, for example, you click and you have a speed bump, right? So those speed bumps could be set to be used for entries and targets. In this case, you would use it for targets because an Elliott wave is a continuation of a move. So typically price would not go down that low, because if that's the case, you would probably hit the dotted line. So using the speed bumps for targets probably is going to be better than just a wave projection. And also using the UFOs for entries, and why not for targets too? It's probably a way more precise way that not only gives you more precision on the entry, but also a way better management of risk, where now instead of doing 1-to-1s with your trades, you are doing 3-to-1s, 5-to-1s, because you are basing your entry on lower time frames. Okay, so the numbers are key when it comes to setting your definition of what is a wave. But with the UFOs, you are likely going to do much, much better. Okay, much, much better from a precision point of view, as well as with the speed bumps. Okay. Wonderful, Christian. Yes, for sure. Again, the concept. Okay, the concept. Going back to all our courses, our survival to mastery courses, which many of you have taken. What are you being told? What are you being taught there when it comes to a conceptual framework on how to trade? You are being told pair two forces, at least two forces, one indirect force together with one direct force in order to add odds to your trade setups. The typical indirect force we use is AutoClimate. The typical direct force we use is UFOs. We also, most of the times, use the EMS, right? So now we got two indirect forces combined with a direct force. So that gives you odds. No UFOs, you only have indirect forces. Could it work? Yes. Could you combine Elliott waves with moving averages? Yes. Could it work? Yes. But again, it's all indirect forces, where when you add order flow to the mix, which is the UFOs, now you are relying on the mechanic of price movement, which is the fact that orders need to get filled for price to move. Even if you had Elliott wave and moving averages and Ichimoku clouds and whatever else, if you didn't have the UFOs, if you didn't have on-field orders changing status from on-field to field, price movement would not occur. So that's the philosophy, right? And therefore, lovely to see, Christian, that that's how you're thinking too. So you can now combine those various tools that you're learning, backtest it, find what are your preferences, because every one of the tools got advantages and disadvantages. Some tools will give you many signals. Some tools will give you very few signals. Some of you may want to be active. Some of you want to be very passive because you're conservative. Again, everybody's different. So combine it, backtest it, and when you get it to in a way where you are comfortable, confident, you know what to expect, then trade it live. Okay, that's the process that you're basically being taught in the courses. Going back to Ichimoku Cloud, okay, and this is the last tool we're gonna cover today. So going back to the Ichimoku Cloud, let me go back to HPQ. Here we go. So what is it? Well, first of all, for the ones of you that never use Ichimoku Cloud, I will just oversimplify it by saying it's a trend following tool or a trend indication type of tool, that when you see the green color, it's telling you it's an uptrend. When you see the red color, it's telling you it's a downtrend. And then, when you have a lot of the crossovers, okay, in here in the middle, you could start anticipating that it's either going to be a sideways market or maybe a change of trend. And basically, this is one of the key features of Ichimoku Cloud, which, of course, if you change the settings by right-clicking, edit study, and go to Ichimoku Cloud, notice how you can change every one of those settings, which are in Japanese, difficult for me to pronounce, and that would impact that you make this tool to be more sensitive or less sensitive to price movement. So you are being told you're in an uptrend sooner or later, and therefore you get more fake indications or less fake indications, but you also may get more trading opportunities or less trading opportunities depending on how you adjust this indicator. So again, like most indicators, probably the classical settings are the best, especially if you're trying to find more people to follow the indications of the indicator. And in this sense, this is how you would use it. Now, what else? You have a collection of other lines, okay, and which I won't discuss today because it would be too much. We need to have like a webinar on Ichimoku Cloud. But you have a collection of all other lines, as you can see. If you look at here, 1, 2, 3, 4, and 5 are the returned outputs of these calculations. So everyone got a different meaning and a different way on how to be used if you are an Ichimoku Cloud trader. So I'm just going for the basics, that when it's green, it's an uptrend, when it's red, it's a downtrend. But here's what I will say as well, is that those zones that are green color or those zones that are red color, not only they represent the direction of the trend, but they also represent a potential buy when it's green or sell when it's red zone into the future. So take a look at the very unique characteristics of Ichimoku Cloud, which is that this is the last candle on the chart, and notice how the indicator is being plotted into the future. Okay, so that's very unique of an indicator. It projects whatever is being calculated into the future, creating, in this case, a buy zone, because the fact that it's green color means that we are in an uptrend. Okay, now it knows we're in an uptrend since here. So, price had to move for a while before it told you you're in an uptrend, which of course there is a little bit of a lag, like most indicators. And since you are in an uptrend, it's telling you, look, if price ever comes to here, buy, because you are likely going to have a movement on that direction. Okay, that's what this is telling you. Here it happened, here it didn't, here it did happen, here it did happen. On the opposite direction, it went to the red and then it bounced down. It went to the red and it bounced down. Okay, then it went to the green here and nothing happened. Okay, so again, like all indicators, sometimes it happens, sometimes it doesn't. Just based on that calculation, that's indirect forces. So again, you know what I'm thinking, right? So how can you use this better? Well, you can turn on the AutoUFOs. Okay, and now notice that you have a green area here. Okay. And this beginning of the area is lining up with that second UFO. The bottom part of the area is lining up with that UFO, so it's not a very good setup. But with the S&P, it's not a very good setup either. What if we look at the 2-day time frame on the S&P? Well, that's a very good setup right now. Okay, so now you can look at the S&P on the 2-day time frame. You are being told that you're in an uptrend. You are being told that all this price range. Okay, let me draw it on the platform. All this price range, starting from here, all the way to here, and starting from here, all the way to here, based on Ichimoku, it's a buy zone, and you have this indirect force, okay, combined with the UFOs. Okay, so this is if you are having a forward-looking approach for the Ichimoku Cloud. If you are looking at what if price crashes down today, like all the way, like there is no tomorrow, the world is ending, and price crashes in a trace line all the way to the green area here, well, guess what? You also have a UFO in that price zone. So no matter how you look at it, this is a perfect setup if you are an Ichimoku cloud trader, combined with the UFOs, which are giving you 50% or more, valid setup for you to plan on along, wait for price to come down. You're in an uptrend, green color. The Ichimoku green zone lines up with the UFOs. Go for it and buy. That is if you want to do that. Now, this looks very beautiful, and it is indeed very beautiful. But in the real world, how many times price came to this particular zone here? So since the beginning of November, and then it's never been back. Okay, so you won't get many trades like that. Fair enough, this is a 2-day time frame, but still, you won't get too many trades like that. Now, having said that, just to give one extra indication, because I know some of you love to sell credit spreads. Okay, so if you are into doing credit spreads, so you can do what I was saying before. You can go ahead and look at the top part of the Ichimoku cloud, look at the bottom part of the Ichimoku cloud. Okay, to current date. I don't know why I went that far. Okay, so here we go, right there. Okay, so this is the current date. So you look at the current date and you look at where is that Ichimoku cloud projecting into the future. So adjust your Ichimoku cloud based on the same settings as the expiration that you're looking for. Let's say the expiration that you're looking for is taking place on January 25. Okay, because again, with the settings of the Ichimoku cloud, you can go ahead and have an offset of X amount of days. So play with the offset to have the offset line up with an expiration date. Let's say January 25 is your expiration date. So now you can go ahead and sell credit spreads where you are basically selling puts and buying puts below that price point. Okay, you're selling puts and buying puts below this price point, expecting the stock to remain above that buy zone, because it's likely going to remain above, because if it's trying to go below, you have the UFOs to defend yourself, plus you have this zone, which may act as a buy zone, attracting new on-field orders to be added that are not in the market yet. So that could be a valid way for you to pick your price zones or your limits, if you wish, when you are selling options, wanting them to expire worthless, which is a classical neutral option application. Now, you cannot do it on the upper side. It's either, because Ichimoku Cloud is a trending indicator, so it's either going to tell you it's an uptrend or a downtrend. So you cannot do it on both sides. You only have green or only have red, but you don't have both. Okay. Anyway, so this would take us to basically to the end of the session. I want to read the final questions there. Are they candles on the charts? Not sure what you mean with that, Joe. Ichimoku Cloud is gonna leave that area on the right with no candles on purpose, because it's projecting that buy zone into the future. So so the way the chart is normal. It's not like I've been using the training mode and I have rewinded the market. It's correct. So, oh, got it. You were joking. I thought that was a serious question. Love it. Thanks for that, my friend. Yeah, so I think that you guys are done with the questions then, I would guess. Okay, wonderful. So, again, in this exercise that we're doing with the top sessions, where we are going through multiple indicators and things like that, I'm kind of giving you a crash course on those indicators because I cannot teach how to use them unless I give you a crash course on them. Some of you may be experts already on some of those indicators, okay? So, and you don't need to know more about it. Some of them, some of you may not know, for example, Ichimoku Cloud, you may have never used it before. So maybe what we covered today may got you curious and you would like to know more. So just Google it, guys, okay? Just Google it and read a little bit about it. There is so much information out there. So you can just find the basic information you need. Remember, with those indicators, you don't want, at least the way I think about it, you don't want to be an expert where you can re-engineer them by changing parameters. What you want to do with those indicators is to use them like everyone else is using them. So that way they can attract people to buy more after you bought or sell more after you sold. Is that making sense? So that's the way I do it. So so let's say that what I just presented to you got you more interested, you want to know more. Option one, Google it, read, watch a couple of videos out there, learn more about them. and probably that's good enough. Or option number two, you're like, well, I need to know more. I would like to know more. So then just go ahead and send me a message, guys, and I'll keep it in mind for future sessions where we can indeed run specific webinars to talk about, even if it's classical technical analysis techniques, whatever that is, and go deeper into it. Even if you're not going to use it, but you want to be more educated or more knowledgeable about it, for sure, we can also, get organized and make time. It's not something that we will do the week after immediately because, we have many things in our hands, but for sure, we will take your consideration and happy to do it anytime you guys need it, okay? Cool. So, my friends, we are done for today then. Christian, thank you for that compliment, and same to you, Mark. Thank you so much. Christian, you always watch Ichimoku Cloud. Very nice. Nice to hear that you are into it. Again, I kept it very, very simple, isn't it? So if you are an expert, I hope you are okay with me keeping it so simple, because that indicator can be used in a way that is quite complex, to be honest. And Fernando, thank you as well. Loved that you loved the Elliott wave part. It's indeed very powerful, and the fact that you can scan for it on the matrix just makes up for a trading plan like that. Okay, and it's powerful. Okay, so yeah, love it, guys. See you next week, my friends. See you on Wednesday with the sessions. Looking forward to continue with all of those sessions and diving deeper and deeper and deeper, guys, because trading is a beautiful thing, and having all the tools and all the choices you need under control, it's my goal, my friends. So you can trade well, be safe, and get that performance kicking in. You guys take care. See you soon. Take care, my friends. Bye bye.